Good morning and welcome to Stock Market Today for Wednesday, April 3rd, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. You'll be able to follow along with this show as well as get daily stock ideas for you to consider in your inbox every morning before the market opens. Just a quick programming note, I will not be here tomorrow and possibly on Friday as well, as I will be attending the CMT Association's annual symposium in New York City. Diving right in now, U.S. equities were mixed in Tuesday's trading with REITs, materials, and comm services as the best performers, while discretionary and energy lagged. The NASDAQ was higher on the day. Treasuries were stronger across the curve. The dollar was slightly better against the euro, unchanged against the yen, and weaker against sterling. Gold finished up 10 basis points, and WTI crude continued to build on recent strength, settling up 1.6%. So your outperformers, REITs, materials, comm services, throw tech and utilities in the mix as well. Underperformers, staples, energy, healthcare, discretionary industrials, and the financials. As we get to the desk this morning, though, we are seeing a bit of a rally. S&P futures are up 50 basis points after that mixed session yesterday. Asian markets rallied overnight, with China and Hong Kong both up over 1%. And for those of you who are now receiving my market survival guide, you'll recall that we like China. European markets are higher as well. Treasuries are under pressure following yesterday's move higher. The dollar is stronger versus the yen, but lagging the euro. Sterling is extending its bounce. Gold is higher. WTI crude is up an additional 30 basis points here today. So let's dive right in. Stocks paused to digest Monday's gains. That's really the best way to kind of clarify or describe yesterday's action. Just a little bit of churning up there near the recent high. Support is in the 2775, 2800 zone. That's unchanged. Then below at 2750. Resistance is in the 2860 to 2900 zone, likely closer to 2900. We get that round number support there. RSI remains in bullish ranges. Remember, this has been a key part of our call. Chaikin money flow is rebounding and continuing to do so. Brief blip into negative territory has reversed, and Chaikin money flow is rebounding. And the power bar ratio, I don't often talk about this, but I wanted to bring it into the mix today. Power bar ratios, you hear us talk about it with our industry work. We could do it for the S&P 500 as well using the SPY. 121 bullish stocks, 48 bearish stocks, so skewed in favor of the bulls. Odds favor a continuation of this move higher towards the September-October highs for the S&P 500. Market in a minute now. What am I talking about in my note to Chaikin Analytics clients today? Stocks turn in a mixed session, digesting Monday's gains. We hit that already. Our overbought, oversold indicators fail to reach oversold readings. That's for the major markets, and we'll take a look at what I mean by that in a moment. But again, you've seen us talk about it at the stock level. We're going to look at it at this industry level and at the market level. Semiconductors continue to lead. That's usually a bullish indicator for the market. Despite the rally since December, sentiment is not a contrarian concern at this point. Futures do point to a higher open here today. Our major markets now from a power bar perspective, the Dow, 3 bulls to 2 bears, down 27 basis points yesterday. A few stocks moved into that neutral range. S&P 500, call it a flat session, up slightly, 121 bulls, 48 bears. We hit on that already. NASDAQ, 23 to 7, bulls to bears. Outperformer yesterday, adding 38 basis points. Small caps underperformed, 452 bulls, 310 bears. Bonds, there's that uptick, sent yields lower, although I will note that bonds are giving some back here this morning. According to the Chaikin Power Bar, large cap stocks and small cap stocks are bullish. Major markets are mixed. We continue to believe that small caps are going to underperform large caps. You can read more about that in our note today. Now, our stock of the day today is Univest Corp. It's a bank and thrift. Closed at $24.93 yesterday, down 20 basis points. Ticker symbol UVSP. Has a very bullish Chaikin power gauge rating due to attractive financial metrics and very positive expert activity. Earnings and technicals are kind of neutral here, but when we roll up the 20 factors, 5 each that fall into these 4 categories, we come out with that very bullish rating. So very bullish rating, strong trends, strong industry group, type of name we want to consider. But we're not pulling the trigger today, and you should all be able to see why right now. You can see that the market and model are not in agreement, that despite this bullish rating, stock is underperforming the market. Dynamic duo not in gear. It's the rating plus relative strength that set up the most potentially powerful moves, and this one just isn't there. Add to that the fact that the overbought, oversold indicator is nearing overbought conditions while money flow is bearish, and we're just not there yet. We're seeing a consolidation, a possible trend change, right? We're downtrend, moves into a sideways trend. Remember, there are 3 trends in the market. A lot of people think about an uptrend. A lot of people think about a downtrend, but sideways is a trend as well and tends to be the most painful trend, generates a lot of whipsaws. We try to avoid sideways markets. We are trend followers. Interesting name. We'll add it to a bullish watch list, but not going to get involved here today with UVSP. Taking a look at our sector tracker now. Movement of the major sectors over the last 5 days. Industrials remains at the top of the list. Remember, that's a group that we've liked. Number 1, because it's pulled back and held support levels. Number 2, because I think it's a lower risk way to play for a rebound in Boeing without taking on the event and company-specific risk within Boeing. Materials, we've talked about it. Downside momentum on a relative basis is waning. Financials see a bit of a rebound as yields have backed up. Nice to see tech back in the top 4, up 2.5% over the past 5 days. Tech's the largest weight in the S&P 500. We want to see tech do well if we are bullish. Bottom of the list, utilities, some profit taking there right now, as we've discussed. We're calling it a counter trend move. Staples, same type situation. Energy rounds out the bottom 3. Discretionary comms, real estate, and healthcare are middle of the road for now. We'll continue to watch those groups. Healthcare is the one we're watching closely. Remember, we've looked at this for a few weeks now when we've done our relative strength work. The relative trend is ugly. There's no doubt about it, but it's nearing a support level. So we're going to see how healthcare reacts at that key inflection point. Speaking of healthcare, industry in focus today is pharmaceutical services, which over the past 6 months has underperformed the S&P 500 by 8.17%. Power bar ratio, which measures future potential, is weak with more bearish than bullish stocks. Currently earns a rank of number 18 of 21 subsectors, moved down 2 slots over the past week. And you can see it here, 10 bearish or very bearish stocks for 5 bullish or very bullish stocks. Some of the indicative names there with very bearish ratings are Therapeutics MD, TXMD, Revance, RVNC, and Wave Life Sciences, WVE. Again, all with very bearish Chaikin power gauge ratings. But as you know, when we're talking about these healthcare stocks, we want to kind of see what's coming down the pipeline. These smaller drug companies, they could have catalysts, announcements of a drug being approved by the FDA or the launch of a new product could easily send the stock higher by, 30 to 50%. Could send it lower by that amount as well. So it's just something to keep in mind as you're looking at these stocks. And we're going to look at one today because it's kind of indicative of what we talk about when we talk about a Chaikin classic bear. Revance, RVNC, closed at 15.18, down 2% yesterday. Very bearish stock. Weak trend, weak industry group. So if you are looking for ideas for potential rebound in the healthcare space, not that we'd advocate, but this is the type of name that you don't want to own, right? It has all the hallmarks of what we call a Chaikin classic bear. What is a Chaikin classic bear? It's a stock with a bearish or very bearish rating that persists, and we will argue that that is the case here. A lot of red here at the bottom of the screen. Also, persistently underperforming the market, and that is the case here. It's been underperforming the market for pretty much the past 12 months. In addition to that, we see large bouts of bearish Chaikin money flow, and that certainly is the case here. You can see a clear downtrend below the declining long-term trend line, currently in an overbought condition, right? So even if you were thinking about going bottom fishing here, which we would never advocate, now would certainly not be the time to do it with the stock overbought with bearish money flow and the intensity of that bearish money flow increasing. I've drawn the line here. You don't need me to draw it, but it's there. This is a downtrend. We don't go bottom fishing in stocks like this. We avoid stocks like this. We look for opportunities on spikes to open bearish positions, assuming we've done all the work on the pipeline. So just an illustrative example of our process. Mark Chaikin likes to say bottom fishing is the most expensive sport in America, and this is a great example of why that is the case. Looking at trending names now, yesterday's S&P 500 gainers and losers. Delta up on positive guidance sent the stock higher by 6%. Wynn saw its price target increased by a research shop, sent that stock higher by 4.4%, building on the positive news the previous day out of Macau. Facebook, I've been getting a lot of questions about Facebook that usually go something like this. Facebook's been hit with a lot of bad news lately, but the stock continues to move higher. Well, that's a signal, right? That's information. When a stock doesn't go down on what you perceive to be bad news, it tells you that that bad news is likely priced into the market, and that is information that you can use in your investment process. No real news to send Mattel up by about 3%. AbbVie has some positive news out of one of their partners on a drug, sent that stock higher by 2.84%. Walgreens, Walgreens is the reason for this entire side of the board. Walgreens EPS missed. That weighed on the drug distributors like ABC, down 5.8%, Cardinal down 4%, McKesson down nearly 3.5%. Also weighed on CVS, a peer group in the name. Just not a ton of good news coming out of Walgreens, and that weighed on the distributors as well as their competitors, CVS, in the market yesterday. Nothing company specific on these names. It all stems as a derivative from Walgreens. So let's dive right in now. What are we talking about? I said our overbought, oversold indicator failed to become oversold. This is one of our Chaikin charts, and you can see here, here's that overbought, oversold indicator. And look, as the market pulled back, overbought, oversold, tried to get oversold, but couldn't, and now it's rounding higher. To me, that's an indication of underlying strength and momentum to the trend here. You can see that SPY has a bullish Chaikin ETF power gauge rating, uptrend above the rising long-term trend line. There's money flow, all the same things that we look at when we start off the show, but I thought that this was interesting because we talk about RSI holding in bullish ranges, so longer term, some momentum, but even in the short term, this is a much shorter term indicator, didn't become oversold. To me, that's a bullish sign for the market, increasing the odds that we are going to test and ultimately break through these highs from back here in September and October. You have the ranges, you know the view. Semi-leadership is usually a bullish indicator, right? You've heard me talk about this a lot, but I just wanted to illustrate it here again today. We're looking at the SOX, the SOXX, relative to the SPY. So the PhilX semiconductor ETF relative to the S&P 500. Now, semis tend to lead at tops and at bottoms, and their relative performance is correlated to the direction of the overall market. So when this ratio is moving higher as it is now, that's generally bullish for the market. Is it guaranteed? Absolutely not. Nothing is guaranteed in this game, but we're playing and dealing with probabilities, and odds favor a continued move higher, especially when we look at it in the context of that overbought, oversold indicator that I just showed you, and in the context of the power bars for the S&P 500. You can see here that momentum for this indicator is shifting to bullish ranges, indicating that this trend is likely to continue. The last thing we kind of want to see here is for the 200-day moving average of the ratio to begin to turn higher. Now, it's starting to flatten out a bit, but still mostly in a downtrend. Should that begin to turn higher, that would just be added confirmation to our view here and give us increased conviction that the S&P 500 is going to retest that 2,900, 2,940 area. Market breadth as well remains strong. Here's the percentage of stocks above the in the S&P 500 above their respective 200-day moving averages. You can see it's solidly broken through those interim highs from the fall. It held support here as it pulled back and retested, and now moving higher. 65% of the stocks in the S&P 500 are above their respective 200-day moving averages. That is positive market breadth. It's a sign that the market is likely to continue to trend higher in the near term here. And remember earlier this week on Monday, we talked about April seasonals, right, as being generally positive for the market. And finally, we're going to look at sentiment. It's on Wednesdays we dig into sentiment. We're looking at the 13-period moving average of the CBOE put-call ratio. It's not overly bullish, right? If this ratio, when this ratio gets down here around 0.8 or lower, that's a sign to kind of wake up and say maybe we're getting a little bit overdone to the upside here. You can see that when this indicator has gotten down to about that 0.8 level, it's marked local highs in the market. We're not at that level yet. We're at 0.88. So despite the move off the December lows, sentiment is not overly frothy to the point where it would warrant taking a contrarian view to the other side. Obviously, something we watch and write about on a weekly basis. So we'll continue to keep an eye on that, but not a worrisome sign yet. That's going to wrap it up. Sign up for the email, chaikinanalytics.com/today. I hope everybody has a great Wednesday. I will see you soon.